Okay, maybe this will work. I'm sorry about that, everyone.
I just
Um,
typed in a message too.
yeah,
I mean,
so we've been talking this whole time. Well, one thing is I've been recording this, so what I'll do is I'll see if I can replace the video. Um, and so I've got a local version that's been recorded, so you'll be able to catch all of that. But thank you
oops.
for letting us
Hopefully,
know.
are we live now? Can
We should be. Can you ask
Okay,
whoever?
maybe this will work.
I'm sorry about that, everyone.
I just typed in a message too. Hi. Hi.
Okay, was that you where we were getting the back? Okay.
That was mine.
Okay, cool. So at least we have the audio coming. I hope you can hear David. Can you say something?
Hello, hello. Can you guys hear me okay?
So I'm going to assume that you came across unless someone tells us otherwise.
Yeah.
Yeah, so that was really strange.
Oops. Sorry, guys.
Yeah. So let's go ahead and what else about the market madness? What else is going on?
Let's see. So we talked a little bit about the market. We talked about, we were looking at the ranges, Apple. Let's see, what else has been? I've been keeping my eye on Russell, the small caps. It's definitely been a leading indicator, I find. If you guys want to keep your eye on that, if you're not, I definitely recommend it. You can, slash RTY or IWM if you want to look at ETF. That's one of those that I always look to. I'm going to have to look at Watch Oxy now that you brought that up, though. That was not on my list. I'm actually going to put that on my list. Right?
Interesting. So let's see. I think I've got. Sorry, I'm just setting up our charts for so we can talk about BBBY. Too many charts. Let's see. Nope, that's the wrong one. Um, there we go. Okay, so let me maximize this. All right, so let me go ahead and why don't we start talking about some charts? We can go over things and we'll talk about BBBY. But let's do this.
Should talk about Kohl's too, I think.
Kohl's?
KSS.
Oh, okay, yeah, we can go over that. So why don't we?
With some of the retail.
Yeah. So it was a big week for retail, and we had some names that really ran, like HD really ran, it kept going. And Walmart gave a nice push, and same thing with Target. So if I remember correctly. But yeah, so let's see. Why don't we figure out which order? Do you want to go over some retail first, or do you want to go over BBBY and then we'll shift to retail?
I think let's do BBBY first, as it was today and past couple of days. It's been the kind of ever storming topic of conversation.
Yeah. So why don't we first? Let's see. I'm going to switch to an hourly. Okay. So this mayhem started last week. I mean, really, they started buying like a week, 2 weeks ago. It looks like so there started being accumulation here, but really the volume picked up on Friday and a couple Fridays ago, and then there was more on that Monday. They had a little dip here, and then we had this monster squeeze out right here and it pushed BBY up here, flushed, came again, ripped up into 30, and then death, death march. And so we should talk a little bit about what happened. Now I don't have the I don't have the filing dates. So if someone does and they want to post it in the YouTube, please do. I would love to um, uh, to get those dates. But basically, the rough idea is that uh, Ryan Cohen with his RC Ventures Um, they basically had out of the money call options. And if I remember correctly, they were those strike prices on those out of the money call options were $60 and $80, right? And I'll let you talk about gamma in a minute about that and how that comes in, David. But what they also did is that back in March, that Cohen disclosed that he had a 9.8% stake
Yep.
in BBBY. So if we take a look, let's go take a look and see on the daily.
Mhm. And I think some of that is a key thing. His stake, short interest, out of the money calls, all of that creating this kind of,
Yeah,
I don't want to say
so
one of a
he
kind scenario, but very similar to some previous scenarios we've seen, like GameStop, stuff like that.
yeah, and
Who was involved in that?
did he have any? Yeah, so he knows the playbook. Okay, so now if you think about it, if he announces back in January, right? Sorry, March, right? He was accumulating in March. His price may have been as much like way up here in the 20s, if that's right. And okay, he has an okay. No, I'm sorry. On August 15th, he says he has now has an 11.8% stake in the in this, and then that. But in March, he said he has a 9.8%. So he added 2%.
So but if you look at the price just in like February, it was as low as like $12. So he may
Yeah,
have been accumulating and then disclosing at that point because it had a big then run up to.
yeah, because I think it has to be. I can't remember if it's 5% or 10% where you have to disclose. I know 10% you have to, and then 5%. So he may have been accumulating here, and then this big rip that happened in the beginning first week of March could have been actually. You know what? He probably is in at an average of under $16 because I would have to assume that this big rip up into $29 is his filing.
That's what I was kind of referring
Yeah,
to.
yeah,
It looks like he was accumulating right before that, right? In that
right.
kind of
So
12
let's
to 17 range.
yeah, and then let's say that he got um, let's see, so if he accumulated a bunch here, right, at $15, $14, $12 maybe, right, and he's got um, I think he has a total of 7.7 million shares, 7.8 million shares, right? Now, I don't know, maybe he's got 7 million here, and then he added another 10% down here at 5, right, to get him to that 11.8%, right? So he actually bought 2% of the company more.
Yep.
So I don't know what his cost basis average would be, but I would guess that it's somewhere, around 10, $11, $12 maybe, right? And that's a lot of pain to be like, look at this. If you were in at 12 and it came down to $5, like you lost half your investment right now. You're down 50%. But you know what? I'm Cohen. I'm going to do a GameStop.
Mm.
I think that's what he did. He's like, okay, I'm going to do a GameStop. He knew how to get himself out of this situation.
If you
And
think about the explosiveness on those out of the money calls, that's where he made his money, right?
yeah,
If
so he had 1.67 million shares under control. So that would be what 100,000, 1.6 million divided by 100, one
160,000,
point 167,000. Is that right?
something like that. Sounds
One
about
hundred
right.
sixty-seven thousand contracts, right? So let's just go through this and see what the January contracts would have looked like. Hope this is a fun session for everyone as we're going through and and figuring out some theoreticals around what happened. But Dot, let's see, he had the January 23. So dot BBBY, 2301. Oh, I need a date. Okay, 0120. Oh no. Dot BBBY, 230120 C60. Okay. And so when all this started, he could have grabbed those at $2. So let's just say that I'm not even go at the 80s, which were, I mean, let's just say
Gave you
50-50, right? So let's just say that we want how many contracts? 100 and I mean, what did we come up with?
what number? What was the number you said he had under control?
1.67 million shares. So that would mean you need to have 167.
No, that's not right.
Is that not
It
right?
was only one. I think it was only 1.6 million shares. You only need 16,000 contracts then, which seems low,
Oh, yeah. No, I
right?
think he needs to have 100,000 contracts because that controls 100 shares, right? One contract controls 100 shares. So you divide by 100.
For how many? 1.6 million?
So to get control of 100 million shares, you need to have a total of 167,000 contracts.
You said 100 million
No,
shares.
no, no, 167,000.
Okay.
Yeah. So 167,000. So let's just say make it 160,000, 80,000 contracts of 60s and 80,000 contracts of the 80s. Let's just split it up. We're going theoreticals. So imagine 80,000 contracts at $2. Is how much? One contract's $2, so it's 80,000, $160,000. Is that right? Sounds low.
I don't know.
Well, 10 contracts is
I didn't follow the math.
okay. So $2. Let's just say we're buying them for $2. If you want one contract, that's $2. If we want
Mhm.
80,000 contracts at $2, it's going to be $160,000. I should have put a notepad up.
I
I think that's right. So it's 160K for 80,000 contracts. Is that right? Seems low.
no, that's what I'm saying. I think I'm getting like 16 million. So you tell me. I don't know. Check. I think one of us is wrong. It quite possibly could be me.
Well, if it's one contract at $2 and I want 80,000 contracts,
Mm-hmm.
that's 100. That's 160,000.
$200 times 80,000, right?
Yeah, 1.6 million.
16
Oh yeah,
million.
that's what it is. It's two more zeros.
That's why I'm
Yeah,
like,
yeah,
you're
yeah,
confused. I'm
yeah,
like,
yeah,
it's
yeah, yeah.
six.
So it's 16 million.
Yeah, yeah, sorry. I was lost because I'm like, wait a
Yeah,
second. It's so small. I'm like, that doesn't make sense to me.
yeah, six. Okay. So okay, 16 million. Okay. Yeah, so it must be 16 million. Got it. Right? Like $2. Yeah, that'd be $200 for one contract. Yep, that's where I forgot that. Okay, not forgot, but 16 million. So then that's for the 16 million on the 60s. Now let's see how much for the other batch on 80 calls. And this
I
is,
said
well, remember those peaked at $10, by the way.
the 60s.
The 60s peaked at $10. So they went from two,
Look at that.
2 to 10. Okay. Then let's see what the 80s did. Same situation. Let's assume he's buying over here, right? These were $1.50. So I'm just going to leave it at the same number, right? Okay, or it's roughly, let's say, $1.50. I mean, he might have been buying it earlier on Monday for $1. Um,
How many contracts do you think he's doing? Same?
yeah, let's just say the same. I mean, we'd have to go through and pull up the volume to kind of really see.
It's like 12 million.
Yep.
What that hit? What those spike up to?
They went from let's just see from this if this was an accumulation, volume was 16. Nope, he would have had to bought it here. Even then, I'm not seeing enough volume to match what he bought to get that kind of control.
Yeah.
He must have been accumulating for a long time or
That's
something.
what I'm wondering. I'm thinking you might need to look.
Yeah, because I'm not seeing. I mean, this spike on volume's not showing up here for that kind of volume control. Or you know what? Maybe it was on the 60s. Okay, but let's just talk theory, right? It could all be garbage, but it's just kind of a fun exercise. It's not money that I'm not ever putting that kind of money on a bet. So, um, you know, the yeah. So here, there was a big volume spike right here, a couple thousand. I just don't see where those where he got that many contracts. If I were right about the numbers, right? Oh wait, 1.67 million shares. He needs 160,000. Yeah, you need 160,000 contracts. So I don't get it. I don't get how that happened, but whatever. I'm not seeing the
How
volume
many
here.
did you say he needs?
It says okay, 1.6 million. Oh, I see what's going on.
I mean,
Okay, no. I might have misread this because he said the state consists of out of the money call options against 1.6 million shares of BBBY stock. And
oh,
yeah, I meant okay. That's what happened.
I mean the volume. Like, if you just look at the daily volume, we're between 12 and 20 some thousand, low 20s at most,
Yeah,
21 in the past few days alone. And then even the prior high days were like 5 to 10. So
yeah,
that would have been tons of accumulation for
yeah.
should have
So I
been.
so I think we have the numbers wrong. Somewhere we got numbers wrong. But if we
Where did it say that about that? Do you have an article where it said? I'm just curious.
yeah, it's from Investor Place. I can share it. I'll put it in. I'll post it inside the YouTube channel for everyone.
Yeah, let's do that because I want to read it too.
Let's see if I can find that chat window. Here we go. Yeah, so we have to find out how many contracts and to get the details. I guess we have to look at that form, but and that should give us more details. But let's just say let's not worry about the options. I mean, the options. Let's just assume they, whatever you probably got 3 to 5x on it, right?
Yeah,
But
that's about right.
and let's say that now he's got 8 million shares. I'm just doing that for the sake of number 7.8 million common shares that he had. That's what he was planning to sell, right? So let's say that he had, just to keep the numbers simple, and let's just say he was able to get his average down to $10 on 8 million shares. And then he was able to liquidate that over $20. Um, let's say a $22 average, then that's what? 12 times 8. That 96. So he would have made $96 million, right? After, let's remember, he probably had that 20. He was probably at a $12 average before, right, or $14 average. So 14 times 8 million. So he had 112 million stake, right? Roughly. Let's just assume, and it had come down to $5. So it's down 60%. So this was down to like $30 million in value, 30 or $40 million,
Yeah.
right? So he bought it in March. 6 months later, it's worth 60% less. And then he's like, I can go from being down 60 million to in the green 100 million.
Yep.
And he did it. I mean, masterful play. But I'm wondering what's going to happen with the SEC. I don't know if this is I don't think there, as far as I can tell, there's nothing illegal about it.
There, there isn't.
Right?
That's like really the crazy part.
He didn't pump it, as far as I know. He didn't say come buy this. People made assumptions based on the calls to the strike prices, and people were like, "Oh, this is going 30 plus," and I was too. I was like, I bought some calls, but nothing that I'm worried about losing. And it went from $2 to zero, like 10 cents today or whatever. It's worthless now. Um, but if it did clear 30, I was expecting it to go to $45, $40 to $45. So I'm willing to risk a couple $100 for potential 5 to 10x. Yeah, right. So
Absolutely. And this is one of those that has that potential. And it's just similar to GameStop, where with the short squeeze, right, people are caught off sides. There's not enough shares. So it becomes all of a sudden a run. And
and that's the other thing. Yeah, they forced buying, right? So that's the thing, is if I had to liquidate, if I want to, now here's the crazy thing of this: the amount of volume. Okay, so he only had 11 million shares to sell. Okay, I'm sorry, 8 million shares to sell. He only had 8 million shares to sell.
what's the volume on it?
Look at the volume on the last 2-3 days.
Whoa.
He had no problem liquidating at the highs. So while I'm saying he sold at 22, he could have sold at 28. He might be up $150 million. Not counting the options. And who knows what he sold and wrote to people buying those 23s. Because
And by the way,
if he's buying those, how many people also jumped in on leaps?
hold on. And let's take this a step back.
Okay.
We're talking about this now. I noticed the gamma potential on the
Yes, you did. You did.
Okay. So he doesn't need to be worried about every inch. He may have been starting that, because if you look, the eighth, go back to the daily chart. I mean, pull that thing up. That's when I started to see some real potential in it. And I
remember you told me, and it was, let's see, which day is the 8th?
Wait till you see. I mean, the potential on the daily. You go, oh, so if that's when stuff was rolling in, which means it probably started to roll in.
So that'd be 10 days ago.
The week prior.
So 10 days ago would be
Initial, like look at that initial little pop. Oh, too.
Okay, so you said on the 8th, so that's that Monday.
That's when I was
That's
kind
right
of
here. After the big spike and came back down.
correct. That's when it kind of hit my radar. I mentioned on the
Yeah.
9th, I was keeping my eyes on the open interest and volume. But look at that prior squeeze to get it there. I mean, who knows? He could have been part of all of this.
Yeah, I
From
mean, you could have taken these January leaps. Okay, here's the crazy thing: you could have taken it here for $1. Thing. Look at this volume on these leaps. These went to $9. 10,000 contracts. That's $1 million.
Yeah. So that's where I'm going. It's not just like, the past couple of days where everyone peaks and it's talked about and it's mania. This was it just doesn't
No,
happen.
there's a wind up, and this was the wind up, right? So
Exactly.
here's the initial. Hey, everybody, it comes back down. You see the volume spike here.
First shorts get squeezed out.
And then basically, yeah, so the crazy thing is, though, by engineering it this way, he way oversubscribed the demand.
It was beautiful.
Right? Because they go, so here's the math. I own 10% of the company. What was the short float? It was like 30-40%.
I got to go back and look.
I think the short float was 30 or 40%, back at the beginning of the month. Let's see, these are reported monthly, I think. So let's take a look at roughly what BBBY's.
Average 30 days of volume, you're looking at like
42% of the float is short.
Yeah.
Okay.
And you're looking at normally like 50 million shares a day anyways traded, right?
Yeah.
So it's not actually terrible. He could have got out of this easily if he needed.
Right, but why am I going to get out for a loss of $12-15 when I can pull a GameStop?
Oh my goodness!
Right, I can do GameStop. I'll just roll out my GameStop plan, boys. Go get the steps for GameStop. We're gonna do it again, and boys and girls. We don't know what the team looks like, but the masterfully done. I mean, I can't knock him. He made a plan. He executed to the plan, and just murdered it. So the challenge is for the folks who kind of got excited and bought at 22, 23, 20, 30, 20, up in the high 20s, thinking this thing is going to go, and then they'll go, oh, I'll just average down, and they put their life savings in. That's who I feel bad for.
Yeah.
But if you're going to play that game, you gotta, like we always teach and say, it's all about risk management. Go, if you want to take a bet, go take a bet, but is it within your risk management tolerance? Right, honor the stops, but do the sizing appropriately.
Yeah.
And
no FOMO.
Yeah, there's no need. There's no need. And
Agent 210 just mentioned the news today says that BBBY has hired a law firm to help her restructure its debt, which sounds more like a bankruptcy. Absolutely could be.
And they need to. I mean,
wouldn't surprise me. Yeah,
they're wrecked.
They are wrecked. No one should be investing.
Yeah, like there's no reason to be buying them.
If you look at the numbers.
And then on top of that, I think they said that they were doing a 9 million share or 7 million share offering or 5 million share offering up at $20, 22, 24.
Sure.
Or I might have got that confused, but I think that was also news about that came out. Because when you have that kind of volume, that's an ATM machine. If you have like, so companies can put a shelf out there and say, hey, we have the option to sell shares at open market, right, and add more shares to the sheet. And it's a great tactic. So when you have stuff like this happen, and you go from $4 to $30 or $25, you can sell a bunch of shares and raise capital. Like, hey, there's 50 million in volume. I'm gonna sell 2 million shares at 25. Guess what? I have 50 million. I have 50 million extra dollars. Maybe I do 5 million shares. Right now I have 125 million if my numbers are right. Right? So that's, you can raise that capital, and that's going to give you a little bit of runway to hire law firms for your bankruptcy, I guess. But total disaster. I'm sorry, BBBY. I have shopped at you. I haven't got your 20% off coupons in a long time. I don't even know where to go where you are nowadays, but the it's best wishes and luck for whatever comes for your future and for the investors. But for us traders, great opportunities. Now we can talk about what our play was. Now we didn't do this whole long and craziness, right? Now when I saw the news that Cohen filed that to liquidate everything, that's where I was grabbing this 19 and 17 puts. Right, we mentioned that a couple of days ago, and I sent a tweet out saying, "Hey, this could, based on this news, we could see sub 10 within weeks." Right? I didn't plan on within 2
We're
days.
at 10 now.
I know. And well, I honestly thought we were gonna get a dip. Somebody was gonna do a monster, try to squeeze one last time, one last hurrah. And so I was thinking, okay, it could take into next week.
I agree.
And so, but the risk reward was there, right? And so this leads to the other thing. So if this could go to $10 and the 17 puts were $1, I mean, they're worth, we're here at $11 now. That's $6 plus an intrinsic value plus whatever else. But what do you do, right? What do you do when you want to, you're worried that maybe there's going to be a short covering bounce by morning and it pops back to $14 before it fades, right? For the options. And, or something else kind of happens.
Sure.
You don't know.
So if you're short, how you offset that, right?
Yeah.
What are the different things you can do?
So the technique I use or like to use is buy common shares. Absolutely. Right? So you can do the math. Say that you're in with 10 contracts at $1,000 for $1, and now these have gone. The 17 puts are now now the contracts at now the BBBY is at $11. So face value wise, these 17 puts are worth at least $6. So if you want to lock it in, I'll lock it all in. I'm done. I'm good enough. You can buy 1,000 shares. If assuming you have the capital, you buy 1,000 shares at $11, and you're going to you basically have locked in. It's $11,000 outlay. What happens if this goes to $5 in the morning?
Nothing. You're okay. You're locked in.
You're right. So basically,
on those shares,
you're going to be red on those common shares, but from 11 to 5, so you're going to be down 6,000. But your option contracts, those puts, are going to be worth $6 more. So you're not worried about the downside. But by buying the shares now, what if it goes to $14? Right? If it opens up at 14 and you buy it at 11, you have 3,000 unrealized in gains on the commons. But at 14, those puts are going to have a face value of $3. So you're still at 6,000 net profit. Right? I'm not net profit. I'm sorry, liquidation, but minus your $1,000, buy-in. So you're still locked in $5,000 profit, 5x your investment. And so that's a great technique, I believe. Now, another way to handle this is
I like scaling on that too.
Yeah,
I like leaving a little. Well, depends on my bias, obviously. If I think the move's over, it's one thing. But sometimes I'll be like, maybe I want to take 75% of it off. lock
Yeah,
it in,
and
and then leave on a little bit for a little continuation move.
and maybe you're just hardcore. You're just like, you know what? This is going to. I don't care.
Going to zero.
This is going to 8 by morning.
Definitely going to
Okay.
zero.
Well, then one thing you can do just to kind of lock in is sell 200 shares or buy 200 shares. So now you've made $1,200 minus, right? You actually minus 1,200, your 1,000 profit. I mean, 1,000 cost. You have $200 in your pocket no matter what. This can go to 50. You're still gonna have $200 in the bank. You're no loss at all potential.
Mm-hmm.
That's another way to handle it, right? If you're just going to do that. So, but the point is, in this whole money management and risk management, is I'm a big believer of when I can advantageously lock in and cover my original capital,
Oh,
then I want to do that, right? Especially at 3x or 5x gain, I don't have to sell everything. I can sell, a third or 20% of my position. My risk is covered, right? Because at the end of the day, it's protecting your capital, and then let your idea do whatever it wants to do.
yeah. I don't know who said it. It's a great saying, but no one ever went broke taking profit. Protect that capital, right? Now, let your trades play out. Be patient because patience pays, right? Let that move happen, but you still need to lock it in. Whether
Right.
it's
Well, I mean, except for taking
do.
profits where you take profits too soon, and then you let your losers ride way more than those winners pay. You can still go broke. Yeah.
Systematically, meaning whether it's like yourself, 3x,
35x. Yeah. If you're consistently having a better than 50% win rate and a better than 3x risk reward, you're gonna be profitable.
Absolutely.
Yeah, and so I did. If you haven't followed me yet at Spectre_trades, I did tweet out a blog post. I'll make sure I also put it on the episode page. But I did write up this afternoon a quick little blog post on this concept of using common shares to lock in gains, and using BBBY as an example. So if anyone's needing that kind of as a write-up or something to reference, be sure to check that out. Okay.
I just posted in the chat for everyone.
Oh, perfect. Thank you.
It was a great write-up.
Okay, 8 to 10. Many of the meme stocks run up only last about 3 days before they crash back down. Pretty you that hedge fund, other than the start the pump up, and when the retail traders come in and pump it up even high, the hedge funds pull the rug. Yeah, absolutely. Yeah, I mean it's a lot of money. A lot of money in play.
It's sustain, right? That's not a sustainable move.
Yeah.
At the end of the day, it always, right? You don't go straight in one direction.
One thing that I was really shocked at is, do you remember this morning I was talking about how there was 100,000 shares of borrows available?
Yes. I felt like that was a lot.
I was shocked because normally I can't find any. And I was like, that tells you that how much people were really like, this is going to keep going. And I was just like, look, if the primary guy who was like started the whole thing is saying, I'm out. I mean, yes, there is opportunity. Somebody else might pick up the flag and try to run it, but unless somebody picks up the flag and sends a message out that we are going to run it, there's no one pumping it. There's no. I mean, in my opinion, it's done. It's good.
Yeah.
And what a disaster or opportunity. I mean, Jesus. But yeah, we made it to the tens, and so pretty cool trade opportunity. This is not a trade we normally take or do. Let me phrase that. These trades don't set up every day, so it's not one of our day in day out trades. But I'm about momentum, and I'm about outsized risk reward, and this was definitely one of the ones that was a outsized risk reward opportunity.
Gorgeous.
Yeah. So. Okay, with that said, why don't we start moving into looking at some charts? And and talk about what's coming up and what's happening.
You guys have any charts you want us to review? If you post them in the comment section, we'll be happy to go over those. Let's see what else. So it seemed there were a lot of the short interest names kind of had a little run, kind of in correlation, right?
Yeah, I mean, I kind of feel like this marked the top. This whole blow off on BBBY to me makes me feel like that's the blow off of the top, and now we're gonna start legging down. I I don't know. It's just kind of things seem to coincide, right?
Yep.
When you have max FOMO, you got people doing all kinds of crazy stuff they shouldn't be doing. It could mark a top.
Max FOMO.
So okay, I'm not seeing any messages like you. So let's say you wanted to talk about KSS. Bring that up.
Talk about Oxy. I just said that too. Hold on, too. One I hadn't looked at either or anything.
So it looks like they had some earnings that weren't so great.
Yeah. And I think if I remember, I think they guided down. I'm not sure, so don't quote me. I didn't listen to the call. I remembered, I think, hearing something on the radio or on TV.
Yeah. So the problem is that with the market's been holding up, right? Because in theory, with a guide down and this run up, in theory, we should be down probably $6 or so, is my guess. So my thinking is that this should be really around $28, $29, maybe even all the way back to 27 on a guide down. That's normally what would happen. But it didn't do that this time. So I'm not sure. Let's see the daily and what's going on.
Yeah, it looks like what's in, they still have, obviously, I'm looking at the daily now, they still have their dividend too. And I know they're doing they were talking on, I think, a Sephora rollout, which is kind of interesting. I don't know if we talked about that, but how a lot of stores have been doing like smaller stores with a model, right? And so they're rolling that out.
Yeah, because they also are like the folks you go to for dropping off your Amazon returns. And,
exactly.
I wouldn't be surprised if most of KS's value right now is on their books, or is on their real estate, believe it or not. I wouldn't be surprised. I wonder what their debt is and what their real estate value holdings are.
That's actually interesting perspective to look at.
Because some of these, like Kmart, was wrecked, but their real estate holdings was immense.
Yeah.
Same thing with Sears. Huge real estate holdings. Okay, let's take a look at Oxy. So good consolidation. It pulled back. It looks like it's setting up for a breakout here, back over 66. Remember that IPO for the Aramco? I don't even know what their ticker is.
Yep.
The Saudi.
Aramco. You're right about it.
I just don't remember what the ticker is.
I'm not sure on Oxy's correlation to crude. I'd have to dig in a little more, but I just pulled up CL just to see where it was, because sometimes that's pivotal when you're looking at certain energies. I'd have to dig into Oxy. That's sitting right around the 90 marker.
Yeah, I mean, this is pulled back. So if we want to look at what happens with oil, we have a possible failed breakdown reversal setup. I'd be watching for this reclaim of $91. Over 91, I think it could start, 91 and 95. Those would be the two key levels I'd be watching. If it gets back over 91 and $95, it opens the door back for a much bigger move to the upside.
Okay. Yeah.
Um, the look at this. Oh wow, LNG totally nutted. 120, 140, broke over 150. So maybe, I mean, I don't know how related these guys are, but um, definitely looking like it's on fire. But yeah, I mean, this could go. This was one of Buffett's big buys. I can't remember if it was here he was buying. I think no, I think it was actually all in here, 55 area. That triggered all this, I think. Um, okay, let's talk a little bit about SPY.
Check your message real quick for me.
Oh, wow. Okay.
Okay.
All right, I will take over, and good luck with that. And thank you,
All right,
David.
guys. All right. Take care, everyone. Thanks.
Okay, sorry guys. Now that lighting has gotten really bright, and really strange how that's happened. But let's see if I can lessen this a little bit. Okay, I'm sorry. It's just now I'm really washed out. Um, okay, well it is what it is. Let me see if I can adjust this so I'm not completely um, looking completely weird. See if that. There we go. Okay. So let's now talk about with some charts. David just had a family emergency to take care of, so we'll catch him next time. But the let's take a look at this. What's going on with SPY here, right? So I was kind and now it's a waiting game, right? Wait for that exhaustion, and then looking for a big dump day, maybe like 425 to 415, 414 all in one day. Kind of like what we got way back when. So I'd love to see something like that. Love to have it happen tomorrow. Let's see. So that's SPY. What other tickers would you guys like to go over? Okay, we can talk about Apple. Had this big spike up over here. The what I was referring to before is if you draw this right here, my estimating might be a little bit off, but okay. So if that's roughly right, we pushed up and over, came down, but we're pushing a little bit over again on this level here. So, I mean, Apple's been crazy strong, crazy, crazy strong. Um, so if it rejects and we start getting red, I mean, what's really wild to me is, let's see where the week opened on this week. I think we opened correctly around 170, 171. And let's take a look at the weekly. Well, look at this. Crazy. 7 straight weeks of upside. So we might need it something like this. Big gap up reversal for the flush out. Or we might need something like this, and then we get another rip, but that was an ER. We don't have an ER till October at this point. So really, the one thing about Apple is I think there people are looking at revenue expansion possibly, um, because of marketing and the ad. So there's definitely a reason for this to maybe keep going, but it'd be good. I think we need a pullback, right? And so watch this, because there's a potential for something like this to develop. So if we close underneath 171 or so this tomorrow, that could then show us a beginning of a multi-red day, multi-week red move, assuming the market is exhausted. The other thing we have to watch for is that we are going up and the volume is coming down. Right, you can see the volume is dropping off, so the volume is getting a little bit exhausted here. Um, so let's see what happens here, right? Let's see if we are done, and not so we're kind of at a decision point on Apple. Okay, what charts would you guys like to go to look at? Happy to bring anything up, any charts. Okay, I'm not seeing too many others, so it's been an hour. Let's go ahead and call it a day. Thank you everyone for coming. Great having everyone. We'll see you next time. Be sure to share the link to this video. Be sure to like it, add comments. We're here to help. If you got questions about how to trade or anything you'd like to know, just feel free to reach out and do our best to answer their questions. So, thank you for coming, and I'll see you next time.